All right. Quick check for those who are on in the room. Can you hear me? And then for those who are on Facebook, quick check. Can you guys hear me as well? Okay, guys. Can you all hear me? Okay, testing again. In the room for Kwan, can you hear me? And then for Facebook side, let me know if you can hear me, right? So then we can start off. All right. Okay. I think you guys will be able to hear. I will assume that you guys will be able to hear. All right. So we'll get started for this week. Okay. So this week itself, if you look into the economic calendar, there's actually not much that is it's actually relatively quiet for this week. Right, you can see Friday today there's nothing at all, and then on Tuesday it'll be very light, mainly some ECB speaking, as well as some Euro members PMI coming in. Right, from French, German, as well as later part you have the pound, EU membership court ruling, and then the Wednesday part is more on the Australian data. And for Thursday is New Zealand plus a little bit on the pound prelim GDP, and on Friday it will be advanced GDP and core durable goods. This economic data will be important, right? But it's actually relatively, I wouldn't say it's much of a tier one kind of data, and we don't expect much movement from this particular data. So the focus will be very much on Donald Trump first week as the 45th US president. Okay, so with that, of course, the focus will be very much on the dollar index. All right, we're going to start off this week analysis with looking at the dollar first. Okay, and then I'll go through some of the major pairs, some of the analysis and potential that we have, and then we'll open up the room for Q&A. All right, so if you guys have questions or any pairs that you want to you want me to look through and share my insights, feel free to drop the questions under the comment section. All right, so let's get started with dollar index. This is my view on dollar index. All right, since the beginning of the year, all right, around 3rd of January, we see that the dollar has weakened a lot. All right, and even for today, when market open, all right, I show you on the 1 hour time frame, you can see that we actually has a gap down this morning. All right, but most traders might be looking at this and say that, you know, on 4 hour time frame is actually on a bearish channel. All right, it's a downtrend, but I would cautious anyone who is still actively shorting the dollar, all right, to be more cautious. All right, you either want to take your short trade very short term, right? It means you want to sell it in a very short term, because what I'm expecting over here is on this higher time frame dollar index, I'm expecting that once this correction is completed, okay, so if you look at the bigger picture perspective, once this correction is completed, I'm expecting the dollar to strengthen all the way back up towards 106.20. Okay, so right now we are in this zone already, between the 23.6 to 38.2 Fibonacci level. It's actually a pretty decent long opportunity area. Okay, if you are a trader who trades more on the longer time frame, this will be an area which is very good and decent risk to reward opportunity to take a long trade. Okay, highly unlikely the dollar index is gonna drop below the 99.38. Okay, but it might, all right, but highly unlikely it's gonna happen. Okay, so once it drops further, it means one more move towards the downside. All right, I'm expecting the downside to be limited, and then we'll be looking for long opportunity. Okay, so how much more it can drop? I believe it can at least test the 99.8, 99.80 this week. Okay, so once it touches that, I believe that from here on we'll look for another opportunity for it to rally all the way back up towards 106.20. Okay, so my suggestion to you is look for the long upside potential, because the risk to reward is actually better on those kind of trade. Okay, so this is for you in dollar index. It might still drop, all right? So do not long right now, but you need some of your own personal trade plan and strategy to engage it. But myself, all right, personally, I'll be looking at 99.80 for a decent long opportunity. All right, looking at the major pairs on euro dollar. Okay, this one was done on the weekend. Okay, price has started to move higher already. So I'll go over to the daily time frame to give you an overall perspective first. Right, so on a daily time frame, I'm expecting this, right? Since the beginning of the year, right? Inversely correlated with the dollar index, you can see over here since January, euro dollar has been on an uptrend, right? A very short upside momentum. How much more it can go, all right? From a daily time frame perspective, this analysis that I did, I'm expecting it to rally as high as 1.0850 to 1.0970. Right, from here, this area, I'll be more bearish on the euro dollar. But as of now, I'll be more cautious, looking for long and sell because it's actually in the midway. Okay, it's at no man's land. And then if I go down to a lower time frame, right, I'm actually looking that this rally up, right, since January would probably end around the 1.08 level. Okay, and then from here, whether is it gonna go very strongly towards the downside, right? Whether it's gonna happen like this, okay, breaking this structure low, or is it just gonna be a correction and then one more wave up? That I would have to look at how the market react once it touched this high. Okay, so as of now, there's nothing much that I can project, but what I know is that if it goes higher, okay, it'll be a very decent short opportunity, at least for the short term, back down towards the 1.0580. Okay, so from 1.08 to 1.0580, you can still capture about the 200 pips movement, right? It's still a very decent profit. But if you are those who look for long-term kind of trade, you know, that gives you up to 500, 600, or even 1,000 pips, this wouldn't be the pair that you want to monitor for this particular week itself, okay? Because there's not much opportunity that you can take on the long term. But if you're longing the euro dollar, all right, just be cautious because 1.08 would be a very significant level that high chance is going to reverse from that. Dollar, pay attention to your trade. If you're looking for short, wait for the 1.08 level to hit before you take the short. All right, pound dollar. This one is something that we have warned all our traders when you are looking for short. All right, we say that the downside might be limited. All right, and don't look for the short. Instead, you know, if you are more aggressive, kind of look for the buy setup instead. All right, so I'll show you on the daily perspective what is the pound dollar forecast that we have. All right, I'm expecting this to happen. Okay, this is a very large perspective, a large time frame perspective. Okay, how far it can go? It can actually rally for pound dollar. It can rally as high as within back into the zone of 1.2860 to 1.3445. Okay, so right now it's hovering around 1.2445. In terms of this up move, you have a lot of room for it to move, all right? Close to about 400 to 500 pips. So these are the potential that you might want to capture and not want to miss. Okay, but this is on daily time frame perspective. And once price actually enter this zone, you want to be cautious because we are expecting one more move back down towards 1.15. Okay, and then after that, we'll see a very significant change in trend. So this might happen, you know, at the end of 2017 or nearer to the end of 2017, perhaps when Britain, you know, settle and sign the Brexit deal and such, right? When they settle down everything, maybe that's the turning point for the UK pound. Okay, but that's still very far off. This week itself, right, going down to a smaller time frame to see if we have opportunity this week. This week itself, I would say nothing much on the pound dollar. Right, let me just zoom in a little bit. Nothing much on the pound dollar that you want to take. Okay, so in terms of opportunity wise, pound dollar, nothing much that's offering on the table. It's not very clear as of now. We want to wait for more sign, right, to tell us how it's going to develop and then what level it'll be decent for us to go in. Okay, so pound dollar, just put aside and wait for next week, right? Dollar yen, this one is also interesting because we shared with the traders last week as well, right, that instead of looking to short, right, this downtrend, instead of looking to short, there's a very high chance you're going to U-turn. Okay, so higher time frame perspective, this is what I'm looking at. Okay, this move can still go higher up to around 1.2015 or 1.20. Okay, then that is the area in which potentially is going to be a significant drop as well. Okay, if I bring you to what weekly time frame, this one I shared it in the potential trade of the year as well. We are expecting one significant down move all the way back down towards around the 91 area. Okay, and I shared in the video and I told you guys that that catalyst that's gonna cause this dollar yen to drop all the way back down to 91. Okay, it's actually coming from the strength of Japanese yen, and for that to happen, there's only potential two kinds of scenario that are gonna cause that kind of movement. Okay, one is gonna be your recession potentially happening in 2017 that's gonna cause that move. Right, so you do not want to miss it if the dollar yen move down that degree, right? And the other kind of catalyst is of course a war breakout in 2017. Okay, I'm not saying that this two is highly likely gonna happen, but if it happens, that's gonna be the catalyst that move your dollar yen, all right? Basically your safe haven is gonna rally all the way. Okay, but this is on weekly and daily time frame. For this week itself, okay, let's zoom into the smaller time frame to show you some potential that you can expect. Okay, this one was this breakout was shared last week, right? And if those who have captured it, you should have taken some profit at the top of this structure level. Okay, because after it hits this structure level, we expect some form of retracement back down. Right now, price is within the zone of 61.8 to 78.6 Fibonacci. Okay, it's a potential reversal area if it's gonna turn back up. Okay, but right now it's still not showing sign that it's gonna go back higher. Okay, of course, traders who are aggressive, you can actually do something like this. Okay, so if you're aggressive, you can look to long. If price comes back down over here, right, your stop just need to put below this low here at 1.112.5. Okay, because if price breaks below this, we are gonna continue seeing a downtrend. Okay, but if price decides to rally higher, it can really go all the way back up towards 119 or even 120. Okay, the one that I showed you on the daily time frame. Okay, so this one is one perspective, one potential that you have if you are aggressive on the dollar yen. Okay, if you are not the aggressive kind of trader, okay, my suggestion to you is wait for some form of confirmation. And what is the confirmation is you want it to at least break higher above this level. Okay, wait for price to break above this high, okay, to give you that confirmation that is going to go higher, right? Do not rush into the trade because each of these trades opportunity ranges from 500 to 1,000 pips. Don't worry about missing it. Okay, even if you enter at 115 all the way to 120 or 119, you have about 400 to 500 pips. Okay, don't worry about rushing into trades. If you are more conservative trader, just wait for sign to confirm that it's going to turn. Okay, so as of now, it's not showing you sign. It's not a good sign that it's going to turn right now. Okay, just keep an eye on this. We are also keeping a very close watch on dollar yen for this particular week. The other one is Aussie dollar and Kiwi dollar. They are pretty similar in terms of how they're going to move. Okay, if I show you on the daily time frame, okay, this is what we are looking at. We are expecting it to go higher from here already. Okay, but before it's gonna go, we are expecting one more retracement down, and then it's gonna go. Okay, it's gonna go up. This up move here, what is gonna cause it is the weakness of dollar, potentially the catalyst of the weakness in terms of dollar. Okay, when dollar rally to 106.20, this might come down. But once dollar hit 106.20, it's gonna come down. Right, dollar is gonna weaken, and when dollar weakens, this is gonna go up. Okay, this is just a forecast, a very long-term perspective of Aussie dollar. Okay, it might or might not happen like this. So let's take a look at this week itself first. What are some of the potential setups that we can see? Okay, as of now, if you haven't entered a long position on Aussie dollar, do not even look to long it because it's showing us clear sign that the upside is fairly limited. Okay, but instead look for the reversal of the trend, the uptrend itself. Okay, so on the H1 is even clearer. Okay, you can see very clear signs of divergence with the MACD already. Right, price is printing higher high, but your MACD is showing very clear sign that it's printing lower high. Okay, so this kind of divergence with this kind of structure formation, it's telling you that when the reversal comes, it's gonna come very sharp. now it's still not showing you that it's ready to reverse. Okay, what you need is, as I forecasted here, wait for this kind of break. Okay, this very strong down move. Okay, this very strong break of the structure, and then once it decides to correct and retrace itself, that's showing you confirmation that it's going. Okay, it's going to go down. So for Aussie dollar this week, we are also monitoring closely, but we are monitoring not to take trades, but we are monitoring whether this break will come this week. Okay, so if this break comes this week, next week we have a very good opportunity to look for a short. Okay, if I bring you to Kiwi dollar, it's actually very similar to it as well. Okay, on the 4-hour time frame. Okay, Kiwi dollar very similar. When this breaks come, okay, we are expecting a very short-term trade and then one more upside. Okay, the only difference here is because Kiwi, this rally up here, there is no divergence, right? So we are expecting Kiwi to have more room to go instead of as compared to Aussie, because Aussie we have a very strong divergence. Okay, we are looking for the reversal, but Kiwi itself over here, there's still no sign that is diverging. Okay, so we are expecting that it can still go slightly higher, perhaps towards the 0.7280. Okay, and then from there we'll look for an opportunity to short. So Kiwi for this week, nothing much, right? We are not monitoring it too closely as well, because we are just giving it some time for it to develop and show us more confirmation where it wants to go. All right, dollar Canadian. All right, dollar Canadian is another interesting one, because for those who have been following us since late last year, all right, we have been calling that this move is gonna come. All right, I even shared this in the video recorded. All right, the potential trades for 2017. If you haven't watched it, you can go and watch it. It's on YouTube channel. This one itself, okay, we are forecasting that once this entire correction is completed, this move down towards 1.1865 is the move that you do not want to miss in 2017. Okay, initially when price broke this structure, okay, this down move was pretty strong. All right, when price broke this structure, we are saying that wait for that correction. Okay, if that correction doesn't come, it means that it can still go higher. And you can see that last week, right, with BOC bearish and dovish statement, okay, they were talking about potential rate cut is still on the table. That causes the Canadian to weaken and dollar CAD to rally very strongly upwards. Okay, so because of this rally, okay, on a lower time frame, because of that strong rally instead of a correction, we are now expecting another move towards the upside first. Okay, up towards this channel structure here around this 1.35 to 1.38. Then over there, we'll be looking for a very good opportunity to take a short trade. Okay, but before it goes there, we can still take short-term long opportunity. Right, we have a divergence over here with a double bottom, and then price rally significantly. Right now, it's in a corrective structure. Okay, so if price continue to come back down towards the 1.32 to 1.3160, right, within this 40 pips range, it will be a very decent opportunity to take a long. All right, and then hold it all the way back up towards this structure level. All right, hold a long here all the way back up towards the structure level to reverse your long trade into a short. Okay, so this one is another potential pair that we are looking out very closely for this week, because we are expecting this correction to complete within this week, and then we'll look for the opportunity to take the long towards the upside on dollar Canadian. All right, again, what's going to move this down is perhaps the weakness of dollar index, all right, as shared earlier in this video. All right, when dollar index weakens, this dollar Canadian will come down, and then after that, when dollar index decide to rally back towards 106.20, okay, this is going to fire off towards 1.37 as well. Okay, so this is for dollar Canadian. Dollar Swiss franc, all right, it's almost similar to dollar yen, all right, and inversely correlated to the dollar euro dollar itself. Okay, so on this dollar franc, okay, we do have a very nice opportunity setting up this week as well. All right, on the H4 time frame, this entire move here is actually a correction. All right, very similar to the dollar index, is actually a correction, and the correction is about to end. All right, when it touches around this zone of 99.45 to 99.70. Okay, we expect the minimum target is for price to test this. All right, it can of course go as low as 98.50. Okay, so this one is this entire area that you see over here. Okay, the 50% Fibonacci, 61.8 Fibonacci, and the 127 is the area in which we will be looking for decent opportunity to take a long trade on the dollar franc. Okay, if I go to hourly time frame, it's also pretty clear that there is a divergence forming. Okay, and you can see the divergence started all the way from this low to this low, and then if price prints another low, we are expecting to see another divergence. All right, from this MACD over here, you can see that the divergence is printing higher low, okay, while price is printing lower low. Right, so once this structure breaks up, all right, we are expecting this, and this structure breaks up, it will confirm the upside momentum. Okay, it's gonna confirm that dollar franc is gonna reverse towards the upside. Wait for this correction to come and then look for that opportunity to take a long trade towards the upside. Okay, so another one that we are monitoring very closely right now, right, is on dollar franc. For those who are aggressive, okay, you can look for long opportunity around here. Your stops go below the 61.8 Fibonacci. Your target can put all the way back up towards the top of this structure level. Okay, this kind of trade already give you a very decent risk to reward of 1:3.5, right? If you're aggressive, okay, you can look for a long around the 99. This is where we're gonna look for a long trade, but just sharing with you ideas that if you are those that aggressive kind of trader who wants to fire off trades, this will be a decent area that you want to look out for. All right, sharing with you some other currencies that we are in. All right, and then I'll open up for some questions to tackle. The first one that I want to share with you is Aussie yen. Okay, this one we shared last Thursday, all right, at the top of this over here at 86.95. We say that potentially Aussie yen can turn towards the downside, all right, and go as low as around the 82.7, or at minimum, all right, test this low over here at 83.7. Okay, so if I bring you to the hourly time frame to look at it clearer, okay, right now this move down is pretty strong, right? That means you are seeing here is a pretty strong reversal, okay, which helps to confirm that price is indeed reversing, okay, but there's a key structure level that I identified over here, okay. Price needs to break this to go lower, okay. So what is going to happen right now is after such strong move, all right, we are going to expect some form of correction, okay. So this correction can comes in this manner, right, something like this. All right, and if it comes like this, all right, if this corrective structure form, you can look for the opportunity to take a short trade. Okay, so it really depends on your strategy to engage it. But when that comes, okay, look for the opportunity to take the short trade, and then you can aim for it. First target, of course, is this structure over here. And if it breaks this structure, you can aim for all the way towards 82.7. Okay, that will be a very decent risk to reward. Okay, if you're gonna take this trade, your short position, let's say you're gonna reverse at least half of this move back towards this structure level here. If your stops is gonna put above your previous high, okay, and you're gonna target all the way back down towards 82, all right, 0.7 area, you can see that this risk to reward give you 1:4. Okay, very decent kind of trade that you do not want to miss as well. Okay, so opportunities and ideas for you to look into. All right, Aussie yen. On the other pair, right, New Zealand yen, very similar to Aussie. Right, both of these are very closely correlated. Okay, giving you perspective on the 4-hour first. You can see that this one, all right, we shorted not at the top. All right, we shorted around the 82.30 level. Okay, because we expect the minimum level that time. That price will reverse around the 82.30, right? But it went as high as 32.80, and then it reversed very strongly today as market open. Okay, so from this, very similar in terms of Aussie yen as well. We are expecting price to at least drop all the way to test minimally this level at 80.4, and potentially it can even go lower at 79.55, right? So we are expecting price to go something like this. Okay, so if you haven't short this, do not enter right now, because we are expecting price is gonna retrace first, all right, and correct itself, and correction comes like this. Okay, so if I pull in some feed to show you how it looks like. Correction can look something like this, all right? Definitely it's not going to be so deep, all right? So let me just do a proper one, all right? Perhaps expect something like this. Oops. All right, expect something like this over here, all right? It's going to correct and consolidate, and then once it's done, then you can look for opportunity to take the short trade. Okay, somewhere maybe around the 50, all right, you can retrace back up towards this structure level or at 82, okay, and then you can look for opportunity. This one, you need to really have a trade plan and strategy to engage it, okay? Your engagement can be based on retracement, right, based on fib, based on certain indicators, but it's really something that do not just enter when I say that I'm in it, but based on a strategy that you learn, all right, a strategy that you have, and then you can take that trade. Right. The last one I'm going to share with you before we open up for question as well, all right, is Aussie Kiwi. Okay, this one is also another trade that I shared in the potential trade of the year in the video, all right? So if you haven't watched it, again, refer to it. What I'm expecting for this is definitely going to be very nice trade opportunity, okay? Late last year, we expected this entire correction to complete, and then after that, it's going to go all the way back up, minimally towards 1.0845, and it can even reach 1.0905. Okay, right now it's just at 1.05. Okay, so this kind of trade is again 400 to 500 pips. You do not want to miss those kind of movement, right? But we didn't manage to catch it at the bottom because it was during Christmas session, right? Christmas season, and then we didn't actively trade the market. Okay, so we missed that opportunity. Price rallied, and then this year it did some form of correction on the lower time frame. I show you on 4 hour. Okay, price did some form of correction after a break above it. Okay, and that's where okay, we have two positions running right now. One of it is around this area at 1.0490. All right, we have one position running here. Okay, when price correct down that time, all right, last week, right, we entered one position at over here, right, and price rallied. Okay, we have another positions when price broke above this high. Okay, so the other position that we are holding right now is in the drawdown. We entered around the 1.0510, right, somewhere around here. Okay, so right now price is still in a consolidation, right? The 1 hour time frame will show you very clear that it's still consolidating, all right? And because of this price development, we are expecting one more move towards the downside. Okay, so we are gonna hold our two positions, all right? Because until price shows us that the upwards trend is done, we are gonna be bullish for Aussie Kiwi for the year of 2017. Okay, so if price decides to come back down as as forecasted like this, okay, it's gonna be another opportunity for you guys to also look for long setup. Okay, around the 1.0450 to 1.0470. Okay, so we are expecting this move to come because this break up followed by a very sharp reversal. All right, kind of symbols that price is still currently in a consolidation. Okay, it's not yet ready to go higher. Right, so once it break this structure that I drew over here at the top, okay, once it break that structure, it's gonna confirm it's gonna go up already. Okay, so as of now, potential level that you want to look out for in terms of Aussie Kiwi, right, will be at the 1.0450 to 1.0470. Okay, so this is the three trades that we are in right now, and just wanted to share with you why we are in and what are the potential that you can also take for this week itself. All right, so right now, let me check if you guys have any question. Okay. Any questions that you guys have? All good. Okay. Let me just share with you then two other pairs, two other very nice potential, all right, that we shared during the in the video, all right, the potential trade of a year video. Okay, we shared it there, but I want to just do this and update you guys how it has move, right? And if possible, right, you can also take opportunity from that. Okay, so let me just clear this. Okay. So in the video, all right, we shared that Euro Aussie and Euro Kiwi are two pairs that you do not want to miss, all right, looking into 2017. Okay, if you look at this, let me just zoom in. Okay, so if you look at this, right, Euro Aussie pair, right, on the daily time frame, since back in early 2015, all right, this move up is very strong. Okay, this move is as fast as 8 months, right? This up move here, right? Let's just take the bottom to the top over here. Okay, this move is from 2005 April, okay, all the way to 2005 end of August, right? That itself, the time that it took to take this kind of move is about 5 months, all right, 4 to 5 months, all right? And that move itself, if I calculate for you, is 1.3690, all right? Let's round up to 1.37. And the top of it around here is 1.65. Okay, if I just give you a ballpark rough figure, right, that's about 2,000 pips. Okay, what we're expecting right now over here in 2017 is this move itself can occur similarly over here in 2017. Okay, and this is the part where you do not want to miss. Okay, if it goes, it can go as fast as in 4 to 5 months, it moved 2,000 pips towards the upside. Okay, so this is one of the trade that we shared with you in the video as well, so not to miss it. Okay, and I'm just going to update you if it's ready to go for now. Okay, so let's go to the lower time frame. Okay, lower time frame, this is what I'm seeing. Okay, this part here, this entire move down, all right, it's forming a divergence. Okay, and you can see from the MACD, it's very clear that it's forming a divergence, followed by a very strong impulse move towards the upside. Right, even on the H1, you can see it already. Okay, this move towards the upside is pretty strong, right? It has broken this down structure. And right now, what we are waiting for in terms of confirmation is for it to form a correction. Okay, the correction needs to come. If the correction don't come and it reverse very sharply, it's not gonna go up yet. Okay, so the sign that is gonna tell you that it's going to go up, right, is this kind of corrective structure. Okay, and when that correction comes, you normally will see something like this. Okay, you'll see something like, for those who are familiar with technical analysis, you see something like a flag structure. Okay, you have the pole, you have the flag development structure, and then you expect another breakout. Okay, so that's the structure that's going to show you that it's gonna go higher. Okay, so right now it's starting to form, but not yet mature yet. All right, you want to see at least 1, 2, 3, and then you can look for opportunity to go higher. Okay, for those who are eager and aggressive, you can easily pull in your Fibonacci from the recent low here, okay, to the recent top, and then look out for that 50 to 61.8 Fibonacci level to look for long opportunity. Right, somewhere around there if I put it correctly. Okay, somewhere between the 1.41 to 1.4125. That is your 50 to 61.8 Fibonacci level. Look out for area, retracement back towards there. Okay, you can look for a long trade. Let me just pull in that. You can look for a long somewhere around this level. Okay, your stop is below your previous structure, previous structure here, and then your target. I would say, if possible, all right, and if your psychology can take it, leave your TP open. Okay, go for the home run for the trade of the year in 2017. Okay, so this is one update, all right, on Euro Aussie, what's happening. Okay, I'll update you on Euro Kiwi as well. Okay, Euro Kiwi is better than Euro Aussie. Okay, because I bring you to the daily time frame to show you what is happening. Okay, Euro Kiwi is actually much more, how put it, two things. All right, one is that it's clearer in the sign that it's ready to go. All right, and the other thing is, if it goes, the potential for you on Euro Kiwi is gonna be more than Euro Aussie. Okay, So again, I'm going to map this to show you this move. Okay, this is back in April 2005. 2015. Okay, this up move entirely, all right, from the bottom to the top. It ends around end of 2005 August. Okay, that is about 4 to 5 months again. And the move that it took was all the way from 1.39, right? And the top over here is 1.85. Okay, so that is close to 4,000 to 5,000 pips. Right? So if I map this onto here, this can happen as fast. All right. Instead, right here, it might has already started. All right. This entire move is a correction. Here you see is a corrective. Right. If you start from here, it can go up, right, as fast as something like this, as fast as 4 to 5 months as well. Okay, so if it starts now, you can expect it to end around May or June 2017. Okay, this kind of move, you will need a catalyst. Okay, and the catalyst on Euro Kiwi and Euro Aussie can comes from a few things. One is Aussie and Kiwi weakens, and the other one is Euro strengthen. Okay, what's gonna cause Euro to strengthen? There are two things on the table in 2017. One will be the tapering, right? If Draghi and ECB starts to talk about tapering, that might give certain strength to the Euro. Okay, the second catalyst on Euro would be your elections happening in Germany, in France, and in Holland. Okay, because right now a lot of them are talking about leaving the Eurozone. Okay, if the elections happen in such a way that it favors the members not leaving, okay, that will give some positive sentiment to the Euro, and it might give Euro the strength to rally. Okay, for Aussie and Kiwi, the weakness can come from either the market uncertainty, okay, meaning you have a risk-off environment. Okay, your commodities currency is gonna weaken. Okay, when that weaken, it's gonna push Euro Aussie up. Okay, so this is a very nice corrective structure that's showing you that it's almost completed. All right, if not already completed. And if I go down to the lower time frame on H1 to show you, all right, we are seeing that this structure, all right, very similar in Euro Aussie, has already been broken strongly towards the upside, and right now is in a correction. Okay, and this correction is more mature than the Euro Aussie pair. Okay, so once this correction is done, you can look for the opportunity to buy again. Okay, so how deep is this correction gonna come? Right, again, you can use a simple FIB. Right, wait for the 50 to 61.8 retracement. All right, that will be the decent area for you to look for long opportunity on Euro Kiwi all the way back up. Right, this is the update that I want to just share with you guys. Okay, other than that, any other questions? Right, let me look at gold and oil if there's any things that I can share with you. Right, oil will be interesting. All right, let me just share with you oil, my perspective on it. Right, in the video I shared that oil we are actually bullish. All right, my sentiment remains the same. All right, we are still bullish on oil. Okay, because we are expecting oil to at least retest the 58.60. All right, once it's touched the 58.60, it might be still bullish or it might not be, but doesn't matter because by then you should have captured some profit. But it's not gonna go right now. Right, it's not ready yet to go up, simply because on the lower time frame, we are looking at this. Right, it's showing us that it can come down one more move. Okay, this move can come down something like this. Let me map this. All right, if I map it correctly, yes. Right, this move can come down something like this. Okay, because we are seeing that this up move, all right, is followed by a very strong reversal. This up move is followed by a very strong reversal. This kind of structure and price movement is corrective in nature. Okay, it's not yet showing sign that it's going to go up. Okay, so we are expecting one more down move, perhaps deeper towards the 48.60 to 49.90, right, or even somewhere in between at 49.10. It'll be decent opportunity for you to look for long if price dip as low as over here. Okay, your stops, of course, can put it slightly below the 61.8, and then you can go for the target all the way back up towards 58.6, 58.60. Okay, again, this kind of trade risk to reward is very decent. Okay, even if you don't want to go all the way, okay, you're more conservative, you want to take your profit off this structure high here, right? This kind of trade also give you a trade or risk to reward of close to 1:4.5. Okay, it's pretty decent in this kind of trades in terms of risk to reward. Okay, you don't have to win a lot of trades, but you just need to win some good trades, and then that will be a very good year for you already. Okay, so this is OI. Not yet. I don't think this is gonna happen in this week itself. All right, this drop not gonna happen probably in this week. Maybe earlier next week this is gonna happen, right? So that's why I didn't share with you in this video. Okay, but moving forward, just keep an eye on this if you are trading the OI itself. All right. Any other questions that you guys have? All right. For those in the room, do you have any questions? Good. Okay. If no questions, we'll end the video webinar for this week over here. Okay. And if you have any questions after that, you digest some of the things that we talk about, and then you decided that you have some things that you want to clarify or certain things that you want to ask, feel free to still drop your questions. Okay. Below, either email me, or if you're on Facebook, just drop it in the comments and then tag me. I'll do my best to reply you guys. Okay, and then just for those who are also in the room, right? We'll be traveling for the next about 10 days, right? So we might be slightly less active in trading, but we'll still be monitoring the market and the trades, right? But because if we are not able to commit to the market, we will normally not actively trade it. Okay, so this is just some of the things that we just like to share with you guys. So in case why you thought that how come we are so quiet and such, that because we are traveling. Okay, next thing is for those who are who likes to look up for analysis and everything, follow me on TradingView. All right, because I do post the major pairs on a weekly basis, all right, on my TradingView account. And then I also update it as we progress. Okay, because I usually update it on Tuesday, which is tomorrow, and then another time on Thursday. Okay, because I'm usually posting on daily time frame. Okay, so when I update it, I'll usually update it on smaller time frame on H1 as well as on H4. Okay, so just search me up on TradingView, and then you can actually follow me so that whenever I post or publish something or update an idea, you actually get notification as well, right? So you can follow my analysis and thought process. Okay, so for example, some of the pairs that I shared with you today, they are also shared on TradingView. Okay, so if you need some recap and refresh, you feel free to go over to TradingView and check on them as well. Right, and of course, again, if you have any questions and such, feel free to post on TradingView as well. Okay, but just a quick disclaimer that all these are just my personal ideas and analysis. Right, it's not something that is going to be 100% accurate all the time and such. So you still need to take note of your own risk management, as well as your own trading plan in engaging the market. All right, if there is no question from the floor as well as from the group, that will be it for this week. Okay, and then we'll talk again on our chat group, as well as I'll see you guys next week itself. All right, so with that, trade according to your plan and always manage your risks. See you guys.